The end of dollar dominance? For 8 decades, the US dollar has reigned as the undisputed anchor of global commerce. The foundations of the modern world were built upon it. The greenback's rise to global reserve status followed the chaos of World War II to the world. America represented the ultimate sanctuary. The New York Stock Exchange became the destination for millions looking to put their capital to work. US treasuries were the world's safe haven, backed by a Federal Reserve, whose independence gave the markets unwavering certainty. But today, that foundation is showing cracks and confidence is flickering. However, the tide is turning. 50 years ago, nearly 90% of global foreign currency reserves were held in dollars. Today, that figure has slid below 60%. Global reserve managers are no longer putting all their eggs in one basket. They are diversifying into gold and alternative currencies. This shift has accelerated over the past year. Investors are now aggressively hedging their dollar exposure, fueled by the erratic economic landscape under President Donald Trump. His America First stance, complaining that the US gives too much and receives too little, combined with a massive ballooning national debt, has markets on edge. When Trump announced sweeping tariffs on nearly all trading partners in April 2025, the greenback took a massive hit. A year later, the dollar is still struggling to regain its footing. Breaking away from the dollar isn't easy, though. It benefits from a massive network effect. The more it's used, the more essential it becomes. But anxiety regarding America's fiscal path is reaching a breaking point. This tension is set to peak in 2026 as Trump seeks more influence over the Federal Reserve, even suggesting he could run the Fed better himself. Across the globe, nations are growing weary of the leverage the dollar gives Washington. China has already pivoted a significant portion of its trade into the yuan. The logic is simple: the less a country relies on the dollar, the less it fears the sting of American sanctions. Even Europe is wary of its dependence on US payment giants, pushing to develop its own independent financial architecture. Dethroning the dollar is a monumental task. Its dominance is deeply entrenched and won't vanish overnight. But history shows us that even the mightiest currencies can be displaced. If American policy continues to be this volatile, its grip on the global economy will eventually slip. So, what's the alternative? The euro looks like a natural successor, backed by a massive economy and a central bank protected by treaty. Yet, the euro has struggled to fill the void. Then there is the Chinese yuan. China is the world's second largest economy and is hungry for currency status, but progress is stalled. Some point toward digital assets, but for now, they remain either too volatile like Bitcoin or tethered directly to the dollar itself like stablecoins. Ultimately, if the dollar loses its safe status, a single successor is unlikely. We are more likely moving toward a multipolar system of competing financial blocks, each with its own set of dangers. For a global system built on the bedrock of the greenback, that represents a seismic, unpredictable shift.